In this video, we're gonna go over the 4 major critical components of a trading plan. Without a trading plan, it's very likely that you are going to fail, whether you are a day trader, whether you are a swing trader, or even if you are a hodler. All right, you don't want to miss out. Make sure to watch until the end and let's get started. All right, guys, the saying that goes, if you don't plan, you plan to fail. It's nothing more true than in trading, especially in a volatile market like crypto. Having a trading plan will help you manage your positions, whether you're a swing trader, whether you are a day trader, or even if you're a hodler, right? At some point, you should take profits if you want to grow your portfolio instead of just adding money in without taking anything out. So what are those 4 components? So number 1 is risk management. And with that, you understand how much you are willing to lose on your account if things don't go your way. Then we have the setup and rules, right? What are the things that you are looking for in order to enter that trade or that position at that given time? And then number 3 is the entry. So what are the confirmations that you're looking for in order to enter a position? Because sometimes everything looks great, but you're missing that confirmation that will give you the exact okay to press the buy button or the sell button in order to enter a trade. And then number 4, we have trade management. How and when you're looking to take profit. So if you don't plan these things beforehand, when you actually are in a trade, then you are going to feel lost because you don't know what to do, right? You are taking your emotions into the chart, you're taking your emotions into the market, and the market doesn't care, right? So you need to have this solid ironclad rules that you can follow no matter what, okay? And if you are wrong in a trade, and if you are on the wrong side of the market at that given time, it's totally fine because you applied the risk management rules, and therefore you're not blowing up your account if a trade doesn't go your way. The risk management is literally how much are you willing to lose if the trade you planned doesn't go your way. So as a rule of thumb, you should only risk 1 or 2% of your account at that given time, okay? Because if you are putting at risk 10% of your account and you place 5 trades and 5 trades in a row don't go your way, half of your account is gone. So you need to understand this, because if you are implementing an effective risk management strategy, you can stay in the game long term, and nothing sucks more of seeing opportunities in front of your eyes and you're not able to take advantage of them because you don't have cash set aside. Okay, so very, very important to do this. So, and let's say that if you're a hodler as well, right? Plan your positions, right? And at some point you should take profits. Plan your position accordingly, even with this principle. And if you want to take a more aggressive approach, you can do that, but notice that opportunities will always come along the way. And if you're stuck in a position that it's a 50% loss, you don't have the capital to actually take advantage of that new opportunity because you have basically money stuck in there at a 50% loss or even more, and you might not be wanting to actually take that loss, which sometimes taking losses is actually at your advantage, because let's say that if you're a 20% loss on a given, like I'm talking about long-term position, and you think that the market is not going your direction, cutting your losses at 20%, it's way better than cutting your losses at 70%, because on that given time frame, your amount of capital gets depleted because you are in a massive losing position. So let's say that, as a risk management rule, we have 1 or 2% of the account. Okay, what are the setup and rules? So you need to have setup and rules based on both sides of the equation, based on the fact that you want to go long or based the fact that you want to go short. And in here, you can write the setup and rules that you are looking for, okay? So I'm just making an example right here in this trading plan. Let's say that you are trading supply and demand zones, okay? So you identify, right, if we're going long, identify a supply and demand zone in the daily time frame and look for a confirmation of pricing coming back to the zone with let's say the stochastic indicator oversold or overbought area. Okay, so this how, with these simple rules, okay, you are clearly identifying where you want to enter that specific trade when you're going long. Okay, let's say that you have multiple ones, right? So multiple ones could be another setup, could be a certain triangle formation and enter at the breakout zone. Okay, so when the price crosses the triangle. Okay, so these are, right, your rules, okay, that you want to observe, right? And whether you're going long and whether you're going short, you clearly need to identify them and have a Google Doc like this one so you can add those rules right here, okay? And then in the entry section, right, you clearly identify your confirmation you're looking for before you enter a trade, okay? So in here, as a confirmation for this plan, we did mention the price coming back to the zone and stochastic indicator confirmation of oversold for a long position. Okay, so that's your clue, right, to actually enter the trade, right? And there's multiple ways where you can structure your trading plan, but having this clear in your head and also on paper will allow you to stay within those rules, okay, and have a completely emotionless approach when it comes to entering the trade and also managing the trade. Then the fourth component is the actual trade management, when you actually going to take profits, okay? It's always a good idea to take profits out of the way early, right? So you can pay yourself all the time. So let's say that your goal, right? So you always establish your goal. So the goal would be is 21% profit per trade. Okay, let's say that we're doing a swing trade. And how are you going to realize that? Okay, so it's not a good approach if you're trying to realize all the 21% profit in one single shot, because sometimes some trades do not get to your profit targets. So a smart way to do is to actually divide your profit targets and close your positions when the price reaches a certain level, right? So if you have to do 7%, so I want to take 7% profit, okay, when I reach 7% profit, I'm going to close 25% of my position, okay? So, and what I mean by that, if I have a position open of 100 Solana, for example, okay? When I have reached the 7% profit on my position, okay? I'm going to close 25% of my position, right? So 25% would mean that I would sell 25 Solanas, okay? So then when I reach another 7% profit, I would close, let's say, 50% of my position. Your other 7% profit, you will close the entire position, okay? With no emotions, with not thinking about, oh, am I gonna go higher, am I not? So you're just gonna take your profits and you're gonna run with it. All right, so that's basically how you're going to do. So let me show you how you can apply a trading plan in TradingView. Okay, so if you don't have TradingView, I would highly recommend to download the software, even if you are downloading the free version. But let's make this example right here. Okay, so here we have the Bitcoin chart. Okay, and my trading plan was to enter a break of structure after the price reached a demand zone. Let's say that we entered this trade right here and we're risking 1% of the account. Okay, we have our take profits already set up in our broker, so there won't be any guesswork in understanding, oh, should I keep the trade open? Should I close it? No, I know, right, based on this trading plan, that I will take my first profit, okay, here at 29,721, the second take profit at 30,180, and my third and final take profit at 30,694, okay? So there won't be any guesswork. My stop loss, okay, always set up your stop loss, okay? My stop loss would be here around 27,868. That would basically have a 1% drawdown on that specific account, okay? And you can use the long position and short position tool to actually plan your trade effectively, so you can easily understand how much are you going to lose on that given trade. And also the software, based on the inputs that you had, so because if you click on here on the gear button, you're able to add the value of your account. Okay, so let's say that the account is $2,000. You're able to set those parameters right here. Also your risk, okay, right now it's set at 1%. And by adjusting your stop loss, okay, the software will tell you how much of that specific asset you can buy in order to lose only 1% if the trade doesn't go your way, okay? So if the price has reached like $26,000, and even if I enter here, I will only lose 1% of the account. But of course, if the further away the stop loss is, the less amount of quantity of that specific asset you're able to buy, because otherwise you will lose more than 1% of your account, okay? So that's very, very important. That's how you can easily implement a trading plan. So we're knowing all the numbers straight away before you even enter a trade. This is something that will definitely help you long term to make sure that you are not blowing up your account. And also, don't use leverage at the beginning, especially if you're not an experienced trader, because leverage is a useful tool, but at the same time, if you are a novice trader, it can blow up your account very easily, because let's say that in this trade, I'm willing to lose only 1% of the account, but I am using a 10x leverage. If the trade doesn't go my way, I will actually lose 10% of the account. So this is something that you have to take into consideration. All right, so just to quickly recap, the 4 components of a trading plan is your risk management, which should be 1 and 2% of the account, setup and rules based on whether you're going long or you're going short, and clearly identify those, the entry point, right? The confirmation that you're looking for before you enter a trade, and also the trade management. So how and when you are going to take profit, all right? So If you're new to the channel, make sure to subscribe, hit the notification bell so you can be notified about these time-sensitive videos. And also check our free Telegram group in the link below so you can join our community where we're gonna talk all the markets update and different topics that relates to the crypto space, and I can't wait to see you in there. All right, I hope you enjoyed this video and I'll see you in the next.